Today we are going to start with error of principle. So this is a type of error where in applying the principle we are making a mistake. So we are doing wrong classification here. You know, expenditures can be of two types. One is revenue expenditure, other one is capital expenditure. These are the two types of expenditure. If while recording a revenue expenditure, you record it as capital expenditure, or a capital expenditure if you record as revenue expenditure, then that is an example of error of principle. Both are expenses, so both will be in the debit. So therefore what happens? Your trial balance will tally. There won't be a difference. Trial balance will tally. But there is a mistake. Your financial statements that is prepared on the basis of the entries that you have passed, on the basis of the trial balance, will not give the correct picture. An example I'll give you, like if there is, example, repairs to machinery, rupees 2000. This is an ordinary repair which was done. It is not going to enhance the capacity or capability of the machine. It is not going to help you in producing more number of units, or it is not extending the life of the machine. It is a routine repair expenses. Which account this has to be debited to? Can anybody try?
And is it capital expenditure?
No, revenue.
Ma'am, but like you told, it won't like enhance anything.
It is not adding to the capability, no? It is not helping you to produce more. It is not helping you to increase the life of the machine, then it's revenue. If it is increasing the life of the machinery, means now it was 5 years was a life, now it is increased to 7. Or now you are able to produce 10,000 units in a day, now you'll be able to produce 12,000 units in a day. Then it would be in the nature of capital expenditure. It is enhancing the life for the production capacity. But this is routine expenditure. Just to maintain it, keep it running, your expenditure is incurred. Then it is a nature of revenue expenditure. So being a revenue expenditure, we will be debiting it to repairs to machinery account. And whatever form it is paid, we would pass the entry. Now this repairs to machinery is a charge against profit. Means this would be in the profit and loss account debit side. When you prepare the profit and loss account, you write to repairs to machinery. And that would be reduced from your gross profit to arrive at the net profit. Got it? Everybody getting that?
Yes, ma'am.
But by mistake, you did not realize, instead of treating it as repairs to machinery, the wrong thing that you did was you debited machinery account. Machinery account cannot be debited here. It should not be capitalized, should not be made a part of the asset. So this is wrong. So by this, what is happening? You are going to include it in fixed asset, and you are probably going to depreciate it also. You'll charge depreciation on it, which is wrong. This is an example of wrong application of accounting principle. What will happen if you do like this? In the balance sheet, you will show this amount on the asset side. And the depreciation you will show in the profit and loss account. So, will the net profit which is being shown in the profit and loss account be correct? No, right? The entire 2000 should have gone to profit and loss account debit side. Instead of that, 2000 got added to machinery. And probably if 10% is the depreciation rate, only 10% of 2200 came to profit and loss account. That also is depreciation of machinery, which is wrong treatment. Got it? Everybody clear?
Yes, ma'am.
This type of error is called as error of principle. So, like this expenses, which are revenue type, you are rating it as capital expenditure, that's a mistake. Similarly, when you purchase an asset, okay, when you purchase an asset, some expenses might be incurred in the purchase of that asset. Like you have to pay for the transportation of that asset. We have seen the depreciation topic now. We have to transport that particular machinery from the vendor's place to your place. You will have to pay the engineer for installation of that machinery. All that expenses should be capitalized, means it should be added to the value of machinery or that particular asset, whichever asset it is. Got that? Are you all getting it?
Yes, ma'am.
But instead of doing that, if you put this transportation expense to transportation expense in the profit and loss account, installation expense into miscellaneous expenditure, then that would be wrong. It should have got added to that machinery. So the machinery was worth 5 lakh. You spent on transportation or freight, is the other term that is used, 20,000. If you paid for installation 10,000, the totally machinery should be debited with 5 lakh 30. But instead of that, if you make a mistake of putting only 5 lakh in the machinery and these into the expenses going to the profit and loss account, that would be wrong. Then we say there is a problem, there is an error of principle. Clear? Rashish, Suchit.
Yes, ma'am.
Yes.
So one more example can be like you purchase a second-hand asset. Means already this asset was owned by somebody. Suppose you take a machinery which was owned by some other business. Now you want that machinery, but you can't afford to buy a new one. So this person is selling his machinery. It isn't needed anymore. So you go to him and you say, I will purchase that machinery. So that machinery is a second-hand machinery that you purchase. So when you purchase that machinery, you will record whatever you paid to get that machinery as debited to machinery account. But that machinery, before you start using, you might have to do some refurbishing to it so that it becomes totally usable. Like that person, suppose Anil is using that machinery, he is selling it. And Sumit is a person who is buying that machinery. So Amit had this machinery, he purchased new machinery and he has kept this aside, unused for 6 months. Now he is selling that to Sumit. Sumit buys it. So it has been unused for 6 months. Obviously, some reconditioning has to be done. Some repairs might have to be done on this particular machinery so that it becomes usable. So that expense that you incur has to be added to the value of machinery. You should not treat it as routine repair expense and put in profit and loss account. If you do that, then it will create the problem of error of principle. Got it? Clear, everybody?
Your voice is breaking.
Voice is breaking for everybody?
I'm just fine for me.
Okay, wait, let me rejoin.
Yeah, rejoin. Suchit, you're there? Who left? Suchit left? Okay. Just to rejoin. So this is clear to others? Suraj and Rashish?
Yes, ma'am.
Similarly, when you sell an asset at that time, what are you supposed to do? You are supposed to credit that particular asset account. So next example is sale of an asset. What is the correct treatment? You should credit the asset account. But wrongly, you credit it to sales account. Then there is error of principle because here it will go in the computation of the profit if you credit it to sales account. Whereas it should have been credited to asset account, asset balance, the balance sheet should have got reduced. So this is another type of error of principle. So has he rejoined?
Yeah, I just rejoined. I can hear you now.
So the next type of error of principle example is when you sell an asset, the correct treatment would be you will be receiving the money or the money will be receivable and you'll be crediting the asset account. That's the correct treatment. But instead of that, if you wrongly credit to sales account, then what is happening when you credit to sales account in the profit and loss account, when you calculate the profit, on the trading account, the gross profit, both the gross profit and net profit would be wrong because of the wrong application. Actually, it should have been credited to asset account means asset balance should have gone down and the balance sheet amount would be different. So that is another example of error of principle. And one more is when you sell an asset and you incur some expense in making that sale. So when you are selling a machinery for say 50,000 and this is the sale value you're receiving, but you have to pay 2,000 rupees as commission or brokerage to the person who helped you make the sale. So you should record it at 48,000. You should not show this separately as an expense in the profit and loss account. The net amount that you're receiving should be treated as a capital receipt, 48,000. So when you do that mistake, then it is also an error of principle. Clear?
Yes, ma'am.
Now we'll start with the questions. I hope the concept is clear. We'll go to illustration number 5 on page number 17.17. I'm sending the question, the group.
Yeah, I got it.
So now Suraj, I've sent it in the group. You can look it from there. Rectify the following errors. So first one is wages paid for construction of office debited to wages account rupees 20,000. So here wages is paid, but it is to construct an office. So when you're constructing an office, you're creating an asset. Office building is going to be created. So whatever you spend in creating that asset should be debited to the asset account. There is probably office building or building account. But what did they do? They committed error of debiting to wages account. Wages account should be debited with only the wages paid to the workers who are working in the factories producing the goods that you're going to sell. So the mistake has occurred here that they have debited to wages account. So if you go by that wrong entry method, wrong entry has been wages account debit to cash or bank account. This was the entry which was passed. But the correct thing would have been you should have debited the amount to building account, that particular asset which was created, to cash or bank, whatever form it was paid. So now to rectify it, what will we do? We should have debited building, so we will debit it here. 20,000. And we had wrongly debited wages, so we will nullify it by giving it a credit like this. So this is a rectification tree that you have to write in the solution. Got it, everybody?
Yes, ma'am.
Yes, ma'am.
Next is cartage. Paid for newly purchased furniture. Rupees 500. Posted to cartage account. So here, what should have happened? You paid, cartage means for the transportation. You paid money for cartage of what? Goods or asset? Newly purchased furniture, so an asset. So when you are paying for transportation of an asset, it should be debited to that asset account. But what happened? They posted it to cartage account. Cartage account is an expense account. So a capital expenditure got posted as revenue expenditure. So the wrong entry that was passed was debit was given to cartage account, to cash or bank. Account 500. The correct entry that should have been passed is what? Furniture account debit. You should add it to the value of the asset that you purchased, in this case furniture, to cash or bank account. So now to rectify this, what should we do? We should have debited furniture. So now we will debit it. Furniture account debit. But wrongly we had debited 500. To nullify it, we would credit it. Clear, everybody?
Yes, ma'am.
This down. We'll go to the next then. Next is 5,000 rupees was paid for installation of machinery is debited to wages account. So here, what is a mistake? Can somebody tell me?
Installation of machine should be debited to machinery account because it's a capital expenditure.
Correct thing would have been
Machinery account debit to cash or bank or whatever.
very good. But what happened? They debited to wages account. So this was what they passed in the books by mistake. They debited wages account, credited cash or bank. So to rectify it, what should we do? We should have debited machine. So now we will debit. And wrongly we had debited wages. We'll nullify it by crediting it. Everybody clear?
Yes, ma'am.
Go to the next one. Machinery purchase for 50,000 was passed through the purchases book. So when you purchase a machinery, which account should it be debited to?
Purchase of machinery account.
Correct would have been machinery account debit to probably some vendor account, because it went through the purchase account means it might have been a credit purchase. So this should have been the correct entry. But what did they do? What was the entry that they passed?
Purchase account to vendor account.
This is account debit to vendor account. Because in purchase book means it can be recorded only when it is credit transaction. So that is why probably we assume that it's a credit transaction. We don't write cash or bank. So vendor account, no problem. Problem is with this. It should be debited to machinery. So we will debit it now. And what will we do to rectify this debit to purchase? We should. What should we do? Tell me.
Credit purchase account.
Purchases account. Last one we have. Finish this up, then I will go to the next. The fifth one is old furniture sold for 5,000 was passed through the sales. So when you sell an asset, what are you supposed to do? What would be the entry passed?
The person account debit to machinery or furniture or asset account.
Very good. So it should be whoever is the vendor account debit to, or you can say, okay, we can leave it as vendor to furniture account. You should have credited furniture account 5,000. But what was the mistake they made? They passed to sales book. So what entry did they pass?
They passed it through sales book, so they credited sales account.
Right, very good. So they have debited the vendor correctly, but they have credited sales account. So sales account was wrongly credited. To nullify that, we would debit it. And furniture account should have been credited, which is not done, which we will do now. So this way, sales account debit to furniture account would be the rectification entry. Clear?
Yes, ma'am.
You're all done, say it down. I will go to the next subtopic. Done copying?
Yes, ma'am.
Yes, Rashish. I think so.
Yes, ma'am, I finished.
Rashish done?
Yeah.
Now let's go to the next one. Now, next we are going to learn about errors of omission. Means where you omitted recording, you forgot to record a transaction. Under that, you have two types: error of complete omission and error of partial omission. So, in complete omission, what happens? You have not recorded the transaction at all. So, what happens? Both the debit and credit has not gone, therefore, your trial balance would agree. There won't be a difference. But in partial omission, what has happened? The transaction has been partially recorded. Means one effect would have gone through. Debit effect would have gone through, credit effect did not go through. Or the opposite, vice versa. In such a case, what happens? One effect gone, other not gone will create a problem in tallying of your trial balance. So your trial balance would not agree or would disagree. It will throw a difference. So first we will do the errors of omission. Question number 6, illustration 6 on 17.18. Let's start with that. Illustration number 6, page number 17.18. Pass as a journal entries to rectify the following errors. First one, a credit sale of rupees 5,000 to Ram omitted to be recorded in the books. So, the business made a credit sale to Ram for 5,000 but forgot to record that particular credit sale to Ram in the books. So, what will we do here? We have to just record it. So, what is the entry you will pass for a credit sale to Ram? 5,000. Who will tell me?
It was omitted to be recorded in the sales book.
Correct.
So, but it has been recorded in Ram's account
Not been recorded at all.
at all.
Not sales book. See, read the question carefully. They have said not omitted to be recorded in the books, not in sales book. Not recorded in the books.
Oh, then we can just record it. No, Ram to sales.
Correct. So the entry is Ram account debit to sales account. Just record it. You have to go back, recall your journal entry topic. Know that entry to be passed is this. So you will pass this entry and in the narration you will say that a credit sale to Ram omitted to be recorded, now rectified. Or now recorded here because it's a complete omission. Next transaction. Goods cost is 2,000 and if you are going to sell it, the sale price is 2,400. It was taken by the proprietor. When it is taken by proprietor, we classify it as what? When goods is taken by the proprietor, what do we treat it as?
Drawings.
Drawings. Were not recorded anywhere. They didn't record these drawings. So to record it. So what would be the entry? When goods are withdrawn for personal use by the proprietor?
And then we have to just record it. No, wait.
Yeah.
And cost is 2,000. Sale price is 2,400. We need to take cost price here, no?
Correct.
Yeah.
We should not take the sale price.
Yeah. So drawings to goods. So drawings to purchases.
Correct. Drawings account debit 2000 to purchases account. Now, why are we not taking 2400? When you purchase the goods in the business, you had intention of selling it. So, when you purchased, you paid 2000 and you recorded it by debiting purchase account with 2000. Later on, the proprietor needed that goods, so he took goods worth 2000 for his personal use. So, by what amount should you reduce the purchase account? It was previously debited with 2000. So, to reduce it, you have to credit it with 2000. Sale price is only when you sell it to outsider and get money. Therefore, you have to ignore the sale price detail here and record it at 2000. Clear, everybody?
Yes, ma'am.
Next is goods were sold rupees 350 to Hari on credit. So when you sold goods on credit, Hari account debit to sales would have been the entry. It was omitted from the accounts. Sorry, just a second. They forgot to record that credit sale to Hari. So Hari to sales was not recorded. Although cash received subsequently from him stands posted to credit. Means after that, we didn't record the sales. But after the credit period, Hari came, he paid 350. We recorded that as a receipt from him. So cash or bank account debit to Hari. So in Hari's account, what has happened? You have recorded the receipt as by cash, 350. You have not recorded the sale. This is missing. So what will you do? You'll have to record it. So basically, you can rectify it by recording the sales transaction. Hari account debit to sales. Clear, everybody?
Yes, ma'am.
A credit sale of old furniture to Mahesh for 500 omitted to be posted is the next transaction. So when there is a sale of furniture, you should have recorded it in the journal prompt. But what happened? You omitted to, they said it is omitted to be posted. So what has happened here? Posting has not gone through. So what will you do?
Ma'am, omitted to be posted. So furniture account is correct.
Correct.
So the correct journal entry is Mahesh to furniture.
Correct. But you cannot pass a journal entry here. Why? Because
Because only one of the accounts are wrong.
both account is wrong. Omitted to be posted, they said. Which account did not say, no? Omitted to be posted to Mahesh account means only in Mahesh account they forgot. If they said omitted to be posted in furniture account, then one account. But they said omitted to be posted means you have recorded it in journal proper. Okay, Mahesh to furniture. But from the journal, the posting should go into Mahesh's account and to furniture account. To debit of Mahesh and to credit of furniture account, which did not happen. Got it?
Okay.
So you do not pass any journal entry here. How do you rectify this? Post to the debit of Mahesh and credit of furniture account. The amount of 500. If you write the journal entry again, what will happen? Already I've written, again you write in it. Double entry will take place in the journal proper. Problem is only from the journal proper, you forgot to post it to the ledger. So ledger only it is missing. So you do the posting. Open the Mahesh's account in ledger, put it on the debit side as to furniture. Open the furniture page in the ledger, put it on the credit side as by Mahesh. And done. Got it?
Yes, ma'am.
Others also clear?
Yes, ma'am.
Last one more transaction we have. That is on 31st of March 2022, goods of value of rupees 3000 were returned by Hari. So Hari had previously purchased from us, we had made a sale. Now he is returning it, so it is a sales return. And were taken into stock. So when he returned it, we took it, we put it back into our stock on the same date. So physically we took the delivery and put it back. But no entry was passed in the books. So only thing that happened was while recording, you forgot to pass the entry. You took the goods from Hari, said okay, put it into the stock along with the other stock. Then you should have opened the accounts book and pass the entry, which you did not do. So what should you do? You have to just record that entry. So what would be the entry? Who can tell me? When goods are returned by the customer, being a sales return.
Sales return. So sales return account debit to sales
Returning
account.
it.
Oh, the vendor account.
Customer.
Hari.
So
Yeah.
her. So you just record that particular transaction. The other term is return inward. So Hari was a debtor, had a debit balance. Now to the extent of the goods return, we are not going to receive the money from him. So to reduce it, we are crediting him by the amount of goods returned. Got it?
Yes, ma'am.
So let me know. I'll send the next question. We will do that question. Everybody done?
This one, yeah.
Then we'll go to the next question. Look at the illustration number 7, page number 17.18. Following errors were identified in the books of Prasad, past message journal entry. So first one we have is rupees 5,000 paid for furniture purchased. Has been charged to ordinary purchase account. So when you purchase furniture, which account should have been charged or debited?
And furniture account
Furniture account. But where did they put it?
and purchase account.
So how to rectify it? Furniture should have been
Credited. Now we
Credited.
need to credit purchases.
furniture should have been debited. So we'll debit it. And purchases was wrongly debited. Nullify it, we would credit it. Very good. So this would be the rectification entry. You will write the necessary narration. Narration very important, otherwise it cut mark. This is furniture purchase wrongly charged to purchase account, now rectified. These entries, rectification entries are passed in the journal proper. The next one is repairs made were debited to building account for 500. So when repair is made, they debited building 500. So where should have that 500 be debited to? Which account?
Repairs for building is repairs account.
Repairs account. Because it is not adding any, you're not adding any floor or you're not increasing the rooms or anything. So it should have gone to the repairs account. So it should have gone here, it has not gone. We'll put it there. But where did they put it? To debit of which account?
Building account.
So to nullify the debit, what will we do?
Credit the building account and debit repairs account.
Building account like this. Repairs account debit to building account. Repairs to building wrongly debited to building account, now rectified. Okay, now we will go to the next one. An amount of Rs 1000 withdrawn by proprietor for his personal use has been debited to trade expense account. So when amount is withdrawn by proprietor for personal use, which account should have been debited?
For personal use, it will be drawings.
But which account did they debit?
Trade expenses.
The mistake. So drawing should have been debited, which is not done. We will do that now. But wrongly they debited trade expense. So what will we do? To nullify the debit, we would credit it. Clear?
Yes, ma'am.
Next question. Rupees 1000 paid for rent. Rent is an expense. You're running a business in a premises which is rented, so you have to pay regular rent to the landlord. So in your books, when you record, you would record it under which account head?
Rent account.
Rent account. So rent account should have been debited. But which account did they debit?
Landlord account.
Is wrong. So we should debit rent account and we should nullify the debit to landlord by crediting. One important concept that you have to remember, when you're paying towards some expenses, like in this case rent being paid to landlord always being an expense of the business, you have to debit to the expense account, that is rent here. If you're paying salary to an employee, say employee Ram is paid a salary of 5,000, you should debit it to salary account, not to Ram account of the books. So you should never debit the personal account of the person when it is a business expense being paid. You have specific account heads, like when rent is paid, rent account is there. When you're paying salary or wages to worker or to salary to the staff, you should debit it to salary or wages account, not to the employee's personal account. Got it, everybody?
Yes, ma'am.
Yes, ma'am.
Next. Fifth one, salary of rupees 1250 paid to a clerk has been debited to his personal account. This is what I was talking. This salary being paid to a clerk, he is our employee of the business, so it should be debited to the expense account, which is salary account. But the mistake occurred that you debited his personal account. So suppose it was Amit, the clerk. Then what did you write? You wrote Amit account debit to cash account, which is wrong. It should have been salary account debit to cash account. So how to rectify it? Which account should be debit? Who can tell me?
Salary account.
Which account is to be credited?
Salary to cash or bank.
No. We are rectifying this, no? We had wrongly debited.
Rectifying, then it should be the personal account.
So that clerk's personal account, which was debited, that has to be credited here. Next one. Rupees 1000 was received from Shah and Company. So when you receive money, you should have written the entry cash or bank account debit to Shah and Company. That should have been the entry. But what happened? You wrongly entered in Shaw and Company. There are two people who are supposed to pay. One is Shah and the one is Shaw. So instead of the correct person, what you did? You put it into Shaw. So what did you record it as? Cash account debit. So wrong entry that you passed was cash or bank account debit to show the amount received. You wrote Shaw and Company, which is wrong. The correct entry would have been where you debit the cash or bank that is received to Shah and Company. So there's no problem with the cash or bank. Problem is you should have credited Shah and Company, but you credited Shaw and Company. So to nullify this credit, what would you do?
From Shah and Co account to Shaw and Co account.
Shaw and Company account debit 1000 to Shah and Company account. The names are going to be rhyming, so please read the question carefully and pass the entry. Don't pass a reverse entry. It would be wrong. So this is the entry you have to pass. This is only for your understanding. You go to the next. Rupees 7,000 paid in cash for a printer was charged to office expense account. So when you paid money to get a printer, what should have been the journal entry? You should have passed entry of printer account debit to cash account. 7,000. Because it's an asset. Printer is an asset. You can use it for many years. But what did you do? You charge it to office expense. So what was the wrong entry? You wrote office expense account debit to cash account. So how to rectify it? The debit should have gone to printer. So now we will put the debit to printer account. And wrongly debited office expense. Nullify it by crediting it. Got it, everybody?
Yes, ma'am. Okay, I'm done.
We'll go to the next question. Then illustration number 8.
Yeah, sure.
Now, go to illustration number 8 on page number 17.19. Pass a message journalist to rectify the following errors. First one, there was purchases of goods from Ram amounting to rupees 1,500 has been.
I think there's a problem with my net. Could I rejoin in like 2 minutes?
Yeah, sure. The purchase of goods from Ram amounting to 1,500 has been wrongly passed through the sales book. So here, what is the wrong entry that was passed? It was actually credit purchase from Ram, but they wrongly passed it through sales book. So therefore, what has happened? You recorded it as sales. When you recorded sales book, obviously you recorded sales. So you would have passed entry of Ram account debit to sales account. This would have been the effect that would have gone through. But the correct entry would have been, if you had passed it in the correct manner, you would have put it to the purchase book. And then the purchases account would have been debited and the credit would have gone to Ram account. So this would have happened if you had recorded it correctly. So how to rectify this mistake? If you see, purchases should have been debited, so we would debit it now, which was not debited before. Sales should have been credited, so we would, sorry. Sales should not have been credited. So to nullify that, what are we supposed to do? Debit it. Now, only Ram account is there. Ram account should have been credited with 1,500, but we made a mistake of debiting him. So we have to credit Ram as is required but not with 1500 but with 3000. Why? 1500 to create this credit of 1500 and other 1500 is to nullify this debit. Getting it? Is it clear? Are you following? Suraj and Rashish?
Yes, ma'am.
Rashish, clear?
Yeah.
So write down this particular entry. Once you're done, say done. I'll go to the next. Can I go to the next? So illustration 8. First one, we have rectified the entry, pass into your purchase account debit, sales account debit to RAM account. The mistake was you debited RAM, credited sales. But actually it was a credit purchase. So it should have been purchases to RAM. So what is to be done was debit to purchase, we gave it. There was a credit to sales which was wrong. So to nullify it, we debit sales. And RAM account should have been credited but was debited. So we have to credit RAM but with double the amount. 1500 to create a credit and 1500 to nullify the debit. Clear?
Yes.
I will go to the next thing. At credit sale of goods of rupees 1200 to Ramesh has been wrongly passed through the purchases. So the wrong entry was it went through the purchases book. So we would have passed the entry of purchases account debit to Ramesh account. The effect would have gone as a debit to purchase and credit to Ramesh would have gone through. But actually, what should have happened? It was a credit sale. So you should have debited Ramesh. Ramesh account should have been debited and sales account should have been credited. So to rectify it, what will we do? Ramesh should have been debited. So we will debit him. But the problem is you can't debit with just 1200. 1200 to create that debit and one more 1200 to nullify this credit effect. So you would debit it with 2400. And then credit should have gone to sales which had not gone. So we will credit sales account. And debit had wrongly gone to purchase account. We'll nullify that debit to purchase by crediting the purchase account with 1200. Clear?
Yes.
Now we'll go to the next. an amount of rupees 2,000 due from Mahesh, which had been written off as bad debt in the previous year, was unexpectedly recovered and has been posted to the personal account of Mahesh. So, understand this. There was a person called Mahesh from whom the business had to receive 2,000, which means Mahesh was the debtor of the business. But what happened? In the previous year, it was found that Mahesh is not going to pay. So, in the books, they wrote off that amount of 2,000 as bad debt. Means in the profit and loss account debit side to bad debt, 2,000 was written off. But unexpectedly in the current year, what happened? The amount of 2,000 was recovered. Means Mahesh came back and paid. When money is received, what did they do? They posted to the personal account of Mahesh. So they passed the wrong entry of amount being received, cash or bank account debit, to Mahesh's account, which is wrong. By crediting Mahesh account, you are creating a credit balance in Mahesh as if you are supposed to pay him back. But when you recover some amount like this, which was previously written off as bad debt, as a loss, now when you're getting it back, it is a gain for the business. And therefore, money coming in, you would debit that particular cash or bank account. You have to credit it to an account called as bad debt recovered account. So that would come in the profit and loss on credit side as a gain, 2,000. Everybody getting that?
Yes, ma'am.
Now to rectify, what should we do? We should nullify the credit to Mahesh. So we would debit him and the amount should have been credited to bad debt recovered account, which is a gain for the business. So you would credit to bad debt recovered account. This would be the rectification entry. Now we'll go to the next one. A check for 1,000 received from Manmohan. So Manmohan was the debtor of the business. He paid 1,000 rupees by means of check. So we got the check. The business went and deposited that check into the bank account. Bank went to Mahesh's bank to collect the amount. It was dishonored. Manmohan did not have balance in the account, so the check got dishonored. So when a check received like this is dishonored, we would have to reverse the original entry which we passed. Originally, when we received the check, we would have debited bank, credited Manmohan account. Now, as the check is dishonored, we should have debited Manmohan and credited bank account because money would have to be reduced from the bank account and Manmohan again becomes a debtor because that amount which is due from him, 1,000, is not yet received, still receivable because of the dishonored check. So the correct entry would have been debiting Manmohan account. By debiting him, you are creating a debit in his account to show that he is still the debtor of the business, and you're crediting bank to nullify that effect on the first entry when you receive the check you had passed bank account to Manmohan. To nullify that, you have reversed that entry. But what was the wrong entry done? They debited to sales return. So what they did? They wrote sales return account debit to bank. So how to rectify this? Problem is not with the bank account. Problem is with the debits. So to rectify it, what we'll do? We have to debit Manmohan account, and by that we are creating this account in the books as debtor. We have to nullify the debit wrongly given to sales return account by crediting it. Clear, everybody?
Yes.
Last one is rupees 5,000 was paid on account of salary to cashier Dhawan. So there was a cashier Dhawan employed, so he was paid a salary of 5,000. So it should have gone to salaries account. But what happened? Stands debited to his personal account. Means the debit went to Dhawan's account. So the wrong entry was Dhawan account debit to cash account, which is wrong. Correct entry is what? Salary account debit to cash account.
Cash account.
How to rectify it? Tell me.
Salary account debit to Dhawan account.
Very good. Salary was not debited, so we debited. Now, by mistake we debited the one account, we will nullify it by giving a credit. So rectification is salary account debit to Dhawan account. Everybody clear?
Yes, ma'am.